जी sir.
Assalamu alaikum ji. So this is your teacher Sir Haris Bhatt, and today we are going to solve a paper, MCQs paper for AS Accounting 9706. Let's see in which year this MCQs paper has come in our exams. So this is February March 2012. So always remember that in February March we have only one variant which Cambridge used to announce, and that is 1-2. It usually comes in India also. And my students who have basically residing in India, they used to give this paper also, 1-2 variant. So this is very important to do all the variants. It has nothing to do that you are only supposed to solve our own variant. You are supposed to solve all the variants if you want to get good marks in your AS Accounting MCQs paper in your exams. To start from question number 1, let's start doing it. A trader sells goods for 6,600 to a customer on 31st March 2019, the last day of his financial year. He does not produce an invoice until 3 days later. He is advised that the sales of 6,600 should be entered in the financial statement for the year ended 31st March 2019. Which accounting principle are being applied? Consistency, prudence, and then again, that is realization. So the answer is definitely realization, because once you have sold the goods, you will record it in your financial statement, right? And you need to record it in the financial statement. Either the payment is received or not. So you have been asked and advised that the sales of 6,600 should be entered in the financial statement for the year ended. So which accounting concepts are being applied? That is realization. So D is the answer. 3 only is going to be the answer. And if we are going to record sales, it means that we are going to record sales. Prudence will not apply. Profit will not be overstated, because when we record it, profit will increase. It will not be overstated basically, because we should record as sales in our books, because the goods have been sold on 31st March 2019, the last day of the financial year. It means the sales has already occurred, but the sales invoice has produced 3 days later. It has produced. It means the goods have been sold. So you have not recorded the sales. You have to record the sales in the books of account, because payment is yet due, doesn't matter. So D is the answer, realization. The following costs for a business relate for a newly purchased machine: alteration to the factory building to install the machine, that is capital expenditure; payment of insurance for the new machine; the final purchase price of the machine agreed with the supplier; the price of the machine before the discount from the supplier. Which cost would be treated as capital expenditure? G. Let me ask you people. Three. So yes, matching can be answer to this question, but right now, so 2 and 3 is which cost would be treated as capital expenditure? That is 1, alteration. Payment for insurance will not be there, and the final purchase price of the machine agreed with the supplier. The 1 and 3 only. B is the answer. Beta, insurance is supposed to be paid every year for the new machine. You have to pay insurance. Insurance is an expense that costs you every year. Either it is for the new machine, but that is an expense. That is an expense for the year, actually. So that's why. So 1 and 3 is going to be the answer. Alteration to install the machine or final purchase price of the machine. The following information is available. Freehold premises at cost 1,25,000. Provision for depreciation of freehold premises 50,000. The premises were revalued at 1,80,000. So first of all, you must remember that how the revaluation basically should have been dealt in the accounts. So what you will do? 1,25,000 minus total depreciation to date, that is 50,000. So the book value of the non-current asset is 75,000. Book value of the non-current asset is 75,000, and now the value has been increased to 1,80,000. So the revaluation reserve which has been created is going to be 1,05,000 will be the revaluation reserve, right? So which entries are required for the revaluation? Freehold premises at cost, forget about it. Provision for depreciation is going to be debited by 50,000. Revaluation reserve is going to be credited by 1,05,000. And the difference of the two amounts will be debited with the freehold premises at cost, and that is going to be 55,000. So the entry is going to be D. Let me pass the entry for you. Means that I will debit premises by 55,000. You may say that it is a balancing figure. You can say like that. Provision for depreciation will be debited because the depreciation charge is going to be cancelled out, because the whole depreciation will need to be abolished. You may say that the asset has newly been revived. You can say like that also. And revaluation reserve is going to be credited because we have a benefit of 1,05,000 out of this. So this is going to be the entry. So premises debit, provision for depreciation debit, and credit revaluation reserve 1,05,000. Revaluation reserve is the difference between 75,000 and 1,80,000. So let's move forward. A business has a year end of 31st December. It purchased a motor vehicle on 1st January for 15,000. The motor vehicle was sold on 31st March for 8,000. Depreciation is calculated at 20% using reducing balance method on a month-by-month basis. So always remember that it is going to be a monthly basis. We have to go for a monthly basis concept. What is the accumulated depreciation and profit and loss on disposal of the motor vehicle? So what is the accumulated depreciation and profit and loss for the disposal of the motor vehicle? The asset which is being sold out, the examiner is asking to calculate the total depreciation on that asset, and then it is required to calculate the profit and loss also. So 31st March 2009. So it will be depreciated 15,000 cost multiplied by 20%. So in 2017, the depreciation is going to be 3,000. Then for 2018, the depreciation is going to be 12,000 into 20%. That will be 2,400. Why, sir? Because there is a reducing balance method. You have to subtract the previous year depreciation first. Then you will get the net book value for 2018, which is 12,000, and 20% of that will be 2,400. Now, for 2019, again, 12,000 minus 2,400, you will get 9,600, which is the book value. And you have to calculate depreciation at the rate of 20% multiplied by how many months? Because it is month-to-month basis, you will calculate depreciation only for 3 months. So 3 over 12, January, February, and March. How much it comes? G3, 9,600 into 20% into 3 over 12. So it comes 480. So 480 is going to be the depreciation. So the total depreciation on the asset sold will be 3,000 plus 2,400, that is 5,400, plus 480, that is 5,880. So the total depreciation is 5,880, and the value of the cost of the asset is 15,000 minus 5,880. You will get the book value of the asset, and the book value of the asset is going to be 9,120, and it is sold for 8,000. So 1,120 is going to be the profit. Is going to be the loss. Sorry, C answer. So 1,120 is going to be the loss because the 9,120 is the book value, but we have sold it at 8,000. So 5,880 total depreciation, and 1,120 is going to be the loss on the asset. A trial balance does not balance and a suspense account is opened. Later, the following errors were found and the suspense account is cleared. A sales invoice for 1240 has been completely omitted from the books. So the entry will be trade receivable debit and sales credit, customer debit and sales credit, because it is error of omission. Purchases had been entered as 85600. The correct amount should have been 87580. So you have basically debited purchases with more amount, with an extra amount. So it is overcast. Purchases has been overcast. So we'll credit purchases and suspense is going to be debited. So the entry will be suspense debit and purchases credit. What is the difference? 87580 minus 85600. How much it will come? 87580 minus 851980. So entry is going to be suspense debit 1980 and purchases is going to be credited by 1980. Spelling mistake, no matter. Okay, rent paid of 2600 was entered correctly in the cash book, but as 6200 in the rent account. So it means that rent, we have recorded rent with the additional amount, extra amount again. Rent is going to be debited by how much? 3600, and suspense is going to be debited by 3600. Suspense debit and rent is going to be purchases had been entered as 85600. The correct amount should have been 87580. So it means that purchases has been undercast basically. So I will not go for this entry. The entry will be purchases to suspense. Why, sir? Because purchases had been entered as 85600. We have entered purchases as 85600 instead of 87580. So it is undercasted. We have undercasted purchases. So purchases to suspense 1980, if I'm not wrong. So now I'm going to prepare the suspense account. Let's prepare the suspense account. You will find out the balance of the suspense easily. That is the difference in the trial balance. So suspense is credited by 1980 because of purchases, and then suspense is debited by 3600 because of rent. So the difference of these two amounts will be our difference in trial balance. That is going to be credit. And that will be 1620 credit. So always remember that it is better to solve it. Unfortunately, students are not willing to listen when they used to do it directly, and sometimes it happens that we could have done a mistake, which was quite easy actually, but we were little more access to solve it quickly, and because of that we used to do a mistake in the paper. The difference is 1620 credit. A is going to be the answer for this question. So quite easy. If you are able to solve it properly, it will become easy. A sale ledger control account includes the following entries: contra with the purchase ledger, account 500 debit, a discount allowed 600 debit, then irrecoverable debts written off 1200 debit. Which entries must be corrected? So which entries needs to be corrected? Discount allowed is debit and irrecoverable debts is going to be debit, written off 1200 debit, and contra with the purchase ledger control account 500, it is also written on the debit side. G, exactly. All three needs to be rectified. Why? Because contra will come on the credit side of SLCA, discount allowed will also come on the credit side of SLCA, and bad debts also comes on the credit side of SLCA. So 1, 2, and 3 is going to be the answer. Quite easy. The company's bank statement showed a credit balance of 2000. Because it is not written anything, it means that bank statement given, so it has a credit balance if nothing is mentioned. The following errors were found: a receipt of 2700 and a payment of 3000 was recorded on the bank statement, but both had been omitted from the cash book. bank charges of 500 were correctly shown in the bank statement but had been recorded as 600 in the cash book. What was the cash book balance before the errors were corrected? So basically, he is asking you to find the cash book balance before the errors were corrected. So you have to go reverse actually. So first of all, you have to see that receipt of 2,700 and a payment of 3,000 were recorded on the bank statement. Both had been omitted from the cash book, but we have not recorded it in the cash book. So it means it's quite easy. This question is quite easy. Why, sir? Because these mistakes are of cash book, both of them. So we just need to revise the cash book. If the bank statement showed a credit balance, it means that the cash book has a debit balance of 2,000. 2,000, how much? We have a 2,000 balance, debit balance of the cash book, right? So now you will write the debit balance of the cash book, and then 2,700 will come on the receipt side. Payment side, you will write 3,000. Bank charges 500, correctly shown in the bank statement, but recorded in the 600 in the cash book. That will also come on the debit side, right? So the answer is going to be, let me make, let me make also for you, 2,200 is the answer, but I will prepare the cash book for you just for the sake of understanding. So here is the cash book, and I want to find the cash book balance before correction, not after correction, before correction. It means that the bank statement balance, credit balance has been given, that is the cash book debit balance. So the carried down balance will come over here. The corrected balance of the cash book is 2,000, because the bank statement also has corrected credit balance of 2,000. It has a debit balance because cash book is always opposite to bank statement. Receipt will come on the debit side, 2,700. Payment will come on the credit side, 3,000, which is not recorded in the cash book. And bank charges, which used to come on the credit side, has been overcast by 100. We have recorded on the credit side bank charges, but we have recorded 100 more on the credit side. So it is going to be debited. So 2 or 3, 5,000. 5,000 minus 2,800. So 2,200 will be the cash book opening balance before correction. The brought down is 2,200. C is going to be the answer. If you are just looking at the questions, you may be able to find that the more you go backwards, the more difficult it is going to be the MCQs. Because this paper basically belongs to February, March. This is rather little more difficult. If you just look at the papers of 2023, you will find it more easy. Then if you just look at 21 and 22, you will find it little less easy. And then you will 2020 and 2020, you will go more towards 19, 18, 17. The complexity level will increase, not decrease. Okay. A business makes a provision for doubtful debts equal to 10% of trade receivable. The provision at 31st March was 8,300. The trade receivable after the provision were 55,800. 2019. What is the change in the provision over the year? So the trade receivable after the provision, you can easily understand this, that the 10% is the provision. No, they're not that way. So 10% is going to be the provision, and the balance brought down of the provision is 8,300. Opening balance brought down. We don't have carried down, but we have trade receivable after the provision of 31st March, that is 55800. It means that is equal to 90% of trade receivable, because that is after the provision. So the trade receivables means actual trade receivable are 5580 divided by 0.9. So this is how you will get the amount of trade receivable, that amount of total trade receivable, how much it comes. 55800 divided by 0.9, 69750. And 10% of this, it is going to be our provision, and that is 6975. And the overall provision, brought down provision is 8,300. And now we need a provision of 6,975. So it means that provision is going to be reduced. But I don't think so. This will work for us. Let me check it. Trade receivable after the provision on 31st March was 55,800. Okay. Okay, 62,000 it will come. So I have calculated it wrong. I don't have the calculator actually. You say this is 62,000 into 10%. That is 6,200. So 8,300, 2,100. 2,100, you have to decrease the provision by 2,100. So A is going to be the answer, right? Because provision doesn't need to be increased, it needs to be decreased. A trader sends goods to a customer on a sales or return basis. Always remember that sales or return basis means that sales has not occurred. At the trader's year end, he had not heard if the customer had accepted the goods. What should the value of goods be included in the trader's books of account at the year end? Inventory and sales revenue. Inventory only, sales revenue and trade receivables, sales revenue only. So the answer is going to be the B. Inventory only. Why, sir? Because we have sent the goods. It means that we have decreased our inventory by that amount, but the inventory has not yet sold out. So we have to add the amount of inventory in the inventory. So inventory will be affected, but he doesn't say that we have passed the entry for sales. So there is nothing has been said. No, he didn't ask. He didn't inform us that the sales entry has passed. What should the value of goods be included in the trader's books of account at the year end? The value of goods will be included in the inventory only. That is what we are asking. Because he heard that the customer has not accepted the goods, but there is nothing written. Yes, nothing written that the goods have been sold yet. So, on 1st May, Trevor had a debit balance of 3,000 on his rent receivable account. Rent received during the year, you will add it up. On 30th April, 4,000 was owing to Trevor for the period ended 30th April 2019. What should be the income statement? So you will prepare the income account simply, and through income account, you will get the answer easily by preparing the income account. So income account may you have an accrued brought down of 3,000. Then 4,000 were owing to Trevor for rent for the period ended 30th April 2009. So that is going to be the accrued carried down 4,000. And the total amount received, which is the bank figure, will come on the credit side is 34,000. So 34,000 plus 4,000, 37,000 will be the 37,000 is not written over here. 34,000 and debit balance. Okay. 30th April 2009, 38. 38 minus 3. So 35,000. B is going to be the answer. How come, sir? Accrued brought down will come on the debit side 3,000. Accrued carried down will come on the credit side 4,000. Bank figure will come on the credit side 34,000. 34 plus 4, 38 minus 3,000. So the income statement is going to be 35,000. B is going to be the answer. Sole trader makes a profit for the year 31,000 after taking the following items into account: carriage inward, decrease in provision for doubtful debt, discount received, other expenses, profit on disposal of non-current asset. What was the gross profit for the year? So what you will do, 31,000 may profit on disposal has been added. So when you will go reverse, let me calculate it for you. how would have been done, how it would have been done. Gross profit has been given and you have added discount received, you have added decrease in provision, then you have added profit on disposal, and then you have subtracted the expenses, other expenses. So this is how we'll move forward. Other expenses will be 28,000, that is negative because we need to subtract that. Profit on disposal is going to be added, so it is positive 300. Decrease in provision is going to be added, so again it is positive 1500. Discount received will also be added, it is an income, so 2000. So you will go reverse because you have the profit, a positive figure of how much? 31,000. So 31,000, you go reverse, 31,000 plus 28,000 because it is you are subtracting it. 31,000 plus 28,000 minus 300 minus 1500 minus 2,000, you will get the answer of gross profit. Because when you go reverse, those things which are added will be subtracted and those things which are subtracted will be added. 55,200 is the answer. That is A. 31,000 plus 28,000 minus 300 minus 1500 and minus 2,000. Okay. X and Y are in partnership sharing profit and losses equally. Y's opening current account was 1350 debit. Residual profit was 23,500 for the year. Y was entitled to the following: interest on capital, salary. Y's drawing during the year were 25,000. What is the closing balance of Y's current account? Very simple. You will prepare the current account. Brought down is going to be 1350. Profit is 23,500 divided by 2. Though it is written residual profit, so it is the total residual profit, means that including X and Y. So you divide it by 2. It will also be written on the credit side. Interest on capital will be credited, salary will be credited, and drawings will come on the debit side. 25,000. You will get the answer of the closing balance of the current account easily. So this is how it will be done. F and P are in business sharing profit and loss in the ratio of 3:1. The capital account balances are F 90,000. It is part of the goodwill. It's not a part of our paper anymore. So no need to go for this. That's fine. L and M are in partnership sharing profit and losses in proportion to their capital invested. Following information is available. Capital is given, L and M. Profit for the year before appropriation, 28,900. Drawings are given for L and M. No interest is charged on drawings up to 10,000 for each partner. So it means that we don't charge interest on drawing for L, but for M, we will charge interest on drawing because that is more than 10,000. Interest at the rate of 5% is charged on any drawing in excess of 10,000. So M, we will charge interest on drawing only 2,000 into 5%. That is going to be 100. What was the L share of residual profit? So the profit before appropriation is 28,900. There will be no add interest on drawing, that is 100. So it will become 29,000 because only interest on drawing will be for M only, which is 2,000 into 5%, which is 100. And there will be no interest on capital, no salary will be subtracted. That's it. So 29,000 capital invested, you have to go for the ratio of 68,000 and 1,02,000. And then you will find the L share of residual profit. You can go for the calculation also. 11,600 is going to be the answer. 68 and 102. This is the ratio between them. So 29,000 of profit will be distributed between L and M in the ratio of 68 and 102. So you can add it up. That will become 170. So L's share will become 68 over 170. Multiply by 29,000, you will get the answer. Which item is shown in the statement of changes in equity? Dividend proposed, no. Interest on long-term loan, no. Issue of debenture, no. revaluation gain on non-current assets. That it comes actually, because non-current assets, the revaluation gain is known as revaluation reserve. And there is a proper head of revaluation reserve. When you are preparing statement of changes in equity, you need to record proper revaluation reserve in the statement of changes in equity. This statement about bonus share is correct. They may be issued as repayment of debenture. They may be issued at a premium. They may be issued to the holders of preference shares, and they may be issued using the share premium account. So which statement about bonus share is correct? They may be issued using the share premium account. Bonus share will never be issued at a premium. It has nothing to do with debenture, and it has nothing to do with preference shares also. So D is going to be the answer. The equity of P Limited on 1st January was 6,68,000. Profit for the year was 1,20,000. During the year ended 31st, following took place: paid an interim dividend of 40,000, transferred 50,000 from retained earning to general reserve, issue 5% debenture for 2 lakh, proposed a final dividend. Always remember that debenture and final dividend proposed will not affect statement of, will not affect equity, because it has nothing to do with the profit. So 1,20,000 minus 40,000, 80,000 will be the profit, and transfer to general reserve will also not affect equity, because it will remain the same. Subtraction from retained earning and it will be added to the general reserve. So it will not affect equity. So 80,000 will be added in 6,68,000 to get the answer of 7,48,000. So this is the answer, 748,000 C. A business applies a markup of 25%. Which statement is correct? Gross margin is 20%. Gross margin is 25%. Profit margin is 20%. Profit margin is 25%. The markup say you have to convert the markup into margin. Percentage over 100 plus percentage. 25 over 100 plus 25. 25 over 125. So the margin is going to be 20%. So gross margin is going to be 20%. A is the answer. So these two MCQs, 3 MCQs are a little bit, you may say that they are easy. The company's result for a year showed credit sales of 5 lakh. The trade receivable collection period was 73 days. In the next year, credit sales were expected to be 5,50,000. And the collection period was not expected to change. What is the expected percentage change in trade receivable? अब करना क्या पड़ेगा आपको? You have to find trade receivable first from this formula, and then you have to find trade receivable again from this sales, and then you will go for the change in, see the change in trade receivable. So this MCQ is also a quite easy one. Why? Because trade receivable over credit sale, that is 5 lakh into 365 is equal to 73. So trade receivables, how much we'll get? 73 over 365 into 5 lakh. How much it is going to be? into 5 lakh. So we will find trade receivable 100K. So trade receivables are going to be, and then again we will find trade receivables with the new credit sales. That is going to be 73, because the ratio won't change. Divide by 5 lakh, divide by 365, multiply by 5,50,000. So how much it comes? And then we can go for the change. It's quite easy, because you can 1 lakh may be considered as 100, and the answer you are going to get from the new credit sales, that will be the trade receivable, that you can see after deducting zeros, you can get the answer easily. 3 zeros, 10% increase. So it means that they will come 1,10,000. So this is how we are getting the 10% increase. Next question is, the business has the following current assets and current liabilities. Current ratio is 2:1. The only other item in the working capital is inventory. what is the value of inventory? Right? So current ratio has been given. And if you just look at this, you can find if you put current assets over current liabilities, you can find the current assets, total current assets, because the current liabilities are 6550, bank overdraft and trade payables. Multiply by 2, you will get current assets. And when you subtract trade receivables, bank overdraft, and cash in hand from that, you will get the value of the inventory easily. So D is the answer, that is 7050. A machine carries out regular factory machine maintenance. He is paid an annual salary of 20,000. Which type of cost is this? Direct labor cost, fixed factory cost, variable factory cost, variable admin cost. The fixed factory cost, the cost for machine maintenance, mechanic carries, and he is paid an annual salary which is fixed, not depending upon the work of the person. So from 23, we are going to get the costing questions. Which statement is correct when production increases? Total fixed cost won't change. Total variable cost basically increases. The fixed cost per unit falls. Variable cost per unit falls. So when production will increase, what will happen? The variable cost per unit will not change. Total fixed cost will not change, right? Total variable cost will increase. Fixed cost per unit will fall when the production is going to increase. Yes. So last question. A manufacturer using the weighted average cost method of inventory valuation. Opening inventory was 10 units at 50, which is 500. 30 units were purchased costing 70 each. 20 units were sold at 80 each. What is the value of inventory at the end of the month? So FCO hai. So we have to go for the average costing method. 10 into 50, that is 500. Then 30 into 70, that is going to be 2100. So 500 plus 2100. 20 into 80 is the selling price. So total amount is going to be 2600 divided by total units. Total amount divided by total quantity. We will get the per unit price, right? So total amount divided by total quantity will be 2600 divided by units are going to be 80. So how much it will come if we just look at the per unit price? No. Units are going to be 80. What is the price? Then we'll multiply it with how much? 10 units are in the opening inventory, 30 have been purchased, 40 minus 20, 20 have been sold. So the closing inventory will be 20, multiplied by average cost per unit. Average cost per unit is what it is? Can you tell me? And then you multiply the average cost with the 20, you will get the value of inventory at the end of month by FCO method. Didn't mention that. That will come 1300. But what is the average cost actually? From this 3 point. I don't know what it is coming, and you are not telling me also. So you can calculate it at home then.